Students, we are taking an example here, illustration 32. When amount is to be paid in semi-annual installment, the installment can be paid half yearly also or quarterly also. So if this is an example of this half yearly installment, if it is the amount is to be paid to the retiring partner on half yearly installments. There may be quarterly installment. The method of solving the question will be the same as we are just studying here. Here PQR were in the partnership sharing profits and losses in the ratio of 2:3:1. Q retires from the firm. After all the necessary adjustment, his capital account shows a credit balance of 2,20,000. This amount is to be paid to the retiring partner, that is Q. Okay. Now this was the closing balance of his capital account as on 31st March 2016. Okay. Now on 1st April 2016, Q is to be paid 60,000. This amount 60,000 is paid on 1st April. Means 31st March this his capital account shows this balance on, or it may be, and this is on 1st April this amount is paid by check immediately, and balance is four equal semi-annual installment. Means semi-annual installment means 6 months installments are there, 4 equal installments are. So here interest will be charged for this amount on 6 months basis, for 6 months, because the amount that will be paid to the partner, here we can calculate that 220 out of this 220, 60,000 is paid. The remaining how much amount is there? 1,60,000 remains. 1,60,000 is to be paid in 4 equal installment. Means 1,60,000 divided by 4. Each installment comes of 40,000. Okay. The first after 6 months, this 40,000 plus amount of interest will be paid. We will calculate the interest for 6 months, and on remaining amount will this next for 6 months, and then remaining amount next 6 months, and this way we will calculate. So semi-annual installment to interest is 10% per annum on unpaid amount. Prepare X loan account until he is paid the entire amount due to him. The firm closes its books on 31st March every year. Okay. Now we'll take this question solved. Okay, this is the this solution that we had opened a loan account here, and we transferred the amount that 2,20,000 transferred to the capital account here, 2,20,000, and this out of this 2,20,000, this on 1st April the amount 60,000 is paid as is there was in question that 60,000 is paid on 1st April. So this is paid. Now remaining amount is 1,60,000. 1,60,000 when is to be paid in 4 equal installment, means 40,000 each. So first of all, to April 1st to 6 month if we calculate, it falls on September, because April, May, June, July, August and September. April 1st to April 30, 1 month, May, June, July, August, September. September 30th. 6 months completed, and we will charge the interest on this day. On which amount? This complete, because out of this 220, 60 is paid. That for remaining 1,60,000 at the rate of 10%, half year interest will be charged here, because on this day we will find out how much interest is there. So interest amount comes 8,000 rupees. If we calculate it, it comes 8,000. So how much will be paid? The amount 40,000 plus 8,000 of interest. So total 48,000 is to be paid to him on September 30. Okay. Now on the now Next this after 6 month, next date of payment come after 6 month, that falls on 31st March 2017. So here again interest will be charged on which amount? Out of this 1,60,000, 40,000 was paid. Now remain, how much remains? 1,20,000. On this 1,20,000 at the rate of 10%, 6 month interest will be charged. That will be 6,000 rupees. So to 6,000 plus 40,000 of the installment will be paid, 46,000. If you take out the balance, total up and then take out the balance, that remains the 80,000, because out of 160, 42 times is paid plus interest, 80,000 remains. This 80,000 will be taken next year, opening balance 80,000 of this loan account. Then again, now on 80,000, 6 month interest we will calculate at the rate of 10%. It comes 4,000 rupees. Okay, this 4,000 rupees, and now this 4,000 plus 40,000 of installment will be paid on September 30th. Okay, here you can see to bank 40,000 plus 4,000 rupees, 44,000. So this is paid here. Okay, and now remains the 40,000 last. So here we will charge the on 31st March after 6 months. This is the last installment to be paid. So this interest will be charged for 40,000. If we calculate the interest on this 40,000 at the rate of 10%, it comes 2,000 rupees. The last installment will be this 2,000 of interest plus 40,000 of installment, and total is 42,000. 42,000 will be paid and the account will be closed. Because no balances there in this loan account. This way this loan account will be maintained, and it may be there it may be 3 equal installment. This quarterly installment amount is loan is to be paid, okay, yearly. So this will also be done in this way, but this quarterly this payment will be done. Okay, thank you.